What's good, YouTube? So I want to go over this play. I made 130% with my group today, and I'm gonna show y'all exactly what we saw. So today was really tricky. It's been kind of tricky lately, but somehow we've been still working it out. I pretty much almost had a perfect week last week for the most part, except Friday. Friday I did not trade that great, but I was able to make up some for it at the end. So here's the 15-minute open range right here, and we were not getting a close below this. I was bearish, just trying to see if we were able to break the low, and we were not able to. One thing that I was seeing right here, if we draw a box right here, support, 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 and they took off, right? I got stopped out a couple of times. I was in puts, got stopped out of those, didn't take too bad of a loss. Got in calls, got stopped out, and this candle right here stopped me out, pulled back pretty hard. We were under the VWAP. I want to bring in the VWAP. One thing I was paying close attention to was the VWAP, was the volume weighted average price. Only reason why I was bearish as long as I was because we were under here for a while. We popped up into it a couple of times, but we kept rejecting. So I'm like, okay, I like the rejections right here. And I kept telling them, I said, hey, they're rejecting, but they're not really selling off the way I want them to. I'm prepared to be stopped out. I don't want to be, but I will, because I'm looking to see if they're going to reclaim the VWAP. I actually got in right here for calls when we got above this VWAP and we claimed above this. I wanted to go ahead and target the highs of this 15-minute open range breakout right here and the pre-market highs. We did just that. So I want to show this indicator that I use. It's called the ATR versus DTR. It's right here. Right here. I want you to look this up. ATR versus DTR. The indicators is right here. ATR versus DTR. All right. Use that. So that's going to be a great indicator. So I want to turn this on. My target was to shoot for upper ADR. So we entered right here, right when we got above, we got to close above the VWAP. We pulled back into the VWAP. I started to buy right here in this area. And it only took, let's go back to the 5-minute time frame. Sorry. So y'all can see this clearly. I want to show y'all the actual candle that I got in on. It wasn't until this candle right here at 1040. This was the candle that got me in. I waited because we had a lot of rejections. Got above the VWAP, and then we finally got a close above the VWAP. This is what stopped me out at first. I ended up getting back in on calls. All right, so I got in right here. We took it all the way up here. I was up pretty nice. I was trying to shoot for this right here. Boom. This little line right there. This is that ADR, average daily range. And if you back test this, you'll see they got like a nice hit rate. They got like a 70 to 80% hit rate as far as like when it gets hit on average out of like the month. So you can back test it and look at the last quarter, the last year. Use that indicator to go back and look at it. All right. So once we got back above this VWAP, once we closed above this, I was in it. Bringing an EMA. We got above the 9 EMA and the 20. And once you see the 20 get up under the VWAP and it starts to push back through the upside of the VWAP, which is that blue line, we got back up here. Now, I'm not going to lie, this pullback was brutal. This was a brutal pullback. We had a strong retracement back down here, but I told them, I said, hey, I'm not getting out of my calls. To me, this is just a pullback because they squeezed all the bears out in this zone right here. This is pretty much like a box of support to me, this whole area. This was support, strong support. We broke above it, came down, break and retest, support, took off. That's what we did. So let me take out this EMA. I was looking for a close above the 5-minute ORB. We got it, but on the 10-minute time frame, we got a fail to up. This red candle right here, when we broke below that, the contracts were down, but I told them, I said, hey, I'm not selling it because I believe we're going to go back up here, hit up ADR. It's just an area of resistance, this was the resistance right here. Came up here and tagged this, and it brung us back down, came back to support, and we got up out of there. Another thing I like to use, so this was higher high, higher low, higher high, okay? I like to draw my trend line right here. As long as you hold that trend line, we're good. Now, I got out at up ADR. I was up 130%. I wanted to hold to, this target up here, but I was pretty much done because I had went through it down here. I was going through this chop fest right here. I mean, it was brutal. I mean, it looks clean after the situation, but I was like, yeah, I'm good. This right here was from yesterday. And I was just telling my group, I said, as long as they inside of this wedge right here, they're probably going to keep continuing here until they break down. What they do, they broke down this red candle right here. Boom. Chop fest the rest of the day. Resistance, support, resistance, support, resistance, fail. Another thing I want to point out is the MACD. Moving average. So right here, I want to point this out. And the reason why I was really bearish is because you look right here on the MACD. So if you look right here, we're up and then we got back up under the VWAP. This right here, these red candles right here, that's like growing to the downside, it was bearish. That's why I was in puts. But once it start to turn light pink and then start to flip green and start to curl back up to the upside, it pretty much forced me to get back in calls. I knew once we got above the VWAP, I used the VWAP, I used the EMAs as confluence. I could have waited till we closed above the actual 15-minute ORB. I could have waited till we closed above that, but I wanted to get a jump start because I know what I'm looking. I've been playing a while and I just understand market structure. So don't be afraid to use the MACD looking at this because it's going to give you a good indication like things are flipping, especially when we find a trend. They're really good for when things find a trend. You can see it went from light green to like the volume kicked up right here. Big green bars, that's what you want to see. And then start to point to the upside. And then you just draw your trend lines. And then just, you know, when you're in calls, you can keep riding it. Now, what I wish I would have done was put a better trailing stop in here because I could have got a lot more out the play. I would have got over 250% because I think I bought the contracts for $790 per contract. And the highest I saw was $3,200 per contract at its peak before I stopped watching. So, but I just wanted to get my money and get up out of there and just enjoy the win. But other than that, this is what I saw for today. And tomorrow, like I said, we got, I think, FOMC meeting tomorrow. We got earnings this week. We got a lot of stuff going on. So be careful playing in this tight range in this market. The ATR is very low for SPX. It's like 79. I'm used to seeing 85 and above, 90. That's when you start to see those bigger candles. So just be careful being too aggressive in this market and play with the size that you're comfortable with, especially if you're going to be playing SPX. If SPX is too much, I would just stick to the SPY, rock out, and just try to, you know, see what this market can do. Be patient in this market. Really believe in the moves that you're playing because let me tell you something, this is going to be a tough ride. Good luck to y'all. Good luck, traders. If you're looking to join the group, please click the link in the description, SPX Blueprint. We are growing fast, and I'm excited for the future. I got some stuff that I'm really waiting on to happen in the market, and we definitely going to be ready. My group is going to be ready to catch these great plays. So good luck to y'all, traders. I'll see y'all on the next.